If you've been spending your waking moments on X or YouTube over the last several weeks, you've probably become familiar with a chart similar to this. It's the Global Liquidity Index. It's basically what the crypto bulls are weighing their hopium on for this next stage of a bull run. I want to talk to you today about why I think this particular indicator alone is relatively useless. However, there are some good things that we can take from it. There's always something that we can take from a particular indicator. But the main thing I want to address in today's video is why I think weighing all of our hopes on this indicator is pretty damn useless. Hit the like button, subscribe to the channel. It's your home of macro cycle analysis. Generally, I'll cover the 18-year cycle. That's through real estate and the economy, Bitcoin, cryptos, the stock markets, and commodities. But today's video, I want to focus specifically on the Global Liquidity Index, why it's useless, what we can do with this indicator to make it useful, and better indicators and signals that I like to use in my trading and investing that are going to give me a better, well-rounded approach to trading and investing for BTC and for the stock markets along with this 18-year cycle. So even though we've heard about it so many times, what the hell is the Global Liquidity Index? Well, it offers a consolidated view of all major central bank balance sheets from around the world. So basically all of the money expressed on this chart, and it says it's relevant forex rates and expressed in trillions. So they're using it as all converted to USD, and the number on the side is expressed in trillions. Now I'm going to use a percentage just because it's easier to read. Otherwise, with the trillions, I mean, between 31 and 29 trillion is a pretty significant number, but it's a bit difficult to read. So we're going to use percentages for the analysis coming up. So what's included in the Global Liquidity Index? Well, it's the Federal Reserve System, the Fed, Treasury General Account, Reserve Repurchase Agreements. It gets a bit boring after this point. So I'll just say Europe, China, Japan, England, Canada, Australia, there you go, the RBA, India, Swiss, Russia, Brazil, Korea, New Zealand, Sweden, and Malaysia. So pretty much the majority of the money out there. Okay, so let's go ahead and dive in. This is the Global Liquidity Index. You can access it from indicators. Just search for Global Liquidity Index. Star it, favorite it, so you've got it for your charts. Now I'm going to turn on the BTC background here, and there we have it. That's BTC on a weekly time frame. So starting from the beginning, I want to just address a couple of things. There are so many questions, concerns, beliefs about this indicator that appear whenever there is a lot of hope lost. Is the Global Liquidity Index a leading indicator? Is it a lagging indicator? Essentially, the main premise that I've heard is that it leads the market by 12 to 14 weeks. Sometimes it's longer than that, 4 to 5 months. And I think we're really good at finding out when do we buy. Basically, people just love to buy markets, but it's very hard to sell. And that's exactly what, I've seen through my history. I'm sure you're starting to see it as well. All we have to go back to is January, where we had these peaks, Trump getting inaugurated, the Trump election back in November, the meme coin from Trump, the meme coins from everyone else around these peaks. And it was very difficult to sell at those times because it seems like the markets need to keep going up. So that's the first couple of things there. Is it a leading indicator? Is it a lagging indicator? I'll get into that in more detail. But to address those questions about buying and selling, the thing I think isn't too useful or too helpful when it comes to the Global Liquidity Index is that it doesn't address these questions on its own. That's going to have to come down to you, to myself. It's going to come down to the individual investor. If you've got a longer term portfolio that you're trying to manage here, not necessarily the day-to-day degeneracy of altcoin or crypto trading, or even, trading your MicroStrategy or Tesla stocks, you need to come up with reasons, signals as to when to buy and when to sell. So when should I buy using this indicator? The main thing we keep hearing is when global liquidity goes up, everything is going to follow suit and we're all going to become absolutely rich. Okay, so maybe that's the case. Maybe once this thing does start to turn, everything goes up and we all become rich. So how soon after the Global Liquidity Index turns up should I buy? Because we can see just going back through history, well, it could go up for a number of percentage points here. Here's my percentages on the side with the Global Liquidity Index. So it started at 176 as an example, 176%, somewhere near this low. It turned around, rallied to 193%, peaked out, double top there at around 193, 194%, and then put in a lower low. So double topped, put in a lower low. Here is the first low, second low, third low, fourth low, lower highs, lower lows. So when do you buy? Do you buy once it goes up a few percent, or do you have to wait for it to break a previous top? Do you have to wait for it to break halfway through where it previously was? Something like a 50% level that we would use. There it is there, never made it to the 50%, failed and kept going down. Like when is that? Okay, that's the first thing. How soon after that point, right? The next thing is, when should I sell? Now, of course, there's a ton of questions in between all this, but I think they're the main two that we want to address here is, when should I sell? Do I sell when as soon as I start to see the global liquidity index turn down? Should I start to sell a particular amount of points to the downside? What about time? Should I just hold on for 12 months? That's as long as the global liquidity index goes up, roughly 12 to 18 months, then make sure I sell. Of course, there's so many other nuances that come into it, and you might already have the answers to this yourself. You might use this in conjunction with other signals, and that's really where I think the power of it can come in and make your plans, your investing, your trading a little bit more powerful. So we've got a few simple questions. Otherwise, I could make the video go for 30 minutes, an hour, and go through a full-on masterclass on how all of this works. Speaking of which, if you do want to get further into the rabbit hole of trading and investing, we have a sale on TIA Premium. There is a link in the top of the video description. Subscribe to that. It'll be coming out today. That's where you go. Name, email address. There is a plethora of courses here to go through: our technical analysis, Wyckoff, Gann, Elliott Wave, and a lot of masterclasses talking specifically about indicators that we use on our trading, which have come up and shown to have very good results, like the 3-bar rule. You guys might remember that from the March peak and the December peak. Also, the overbalance in price, which I'll talk about in today's video again, just looking at how you can almost guarantee that we're going to get a change in trend. Of course, there's nothing that's 100%, but those particular signals, overbalance in time and price, along with the other signals that we use, are really powerful indicators when used together. So let's get back to the Global Liquidity Index and the questions here, buying and selling. So really, I'm just trying to demonstrate here how futile I think it is just to weigh our hopes on one particular indicator. Now, where I think this has stemmed from is that when you look back through the first 1, 2, 3 cycles of BTC, just taking it at face value, which is pretty much what happens on X, you see a post, oh, this line goes up, the market goes up. This line goes down, the market goes down. Sort of at face value, it seems that's the way. But in between that, there is a lot of differences. As an example here, 2017, it peaked in December 2017. The Global Liquidity Index peaked somewhere around February, March, but it also peaked in September when Bitcoin was sitting at $4,500. So do you sell once this turns down here, or do you keep holding on for the ride? That's why I think the swing indicator is a much better tool to help you hold on for the ride and then get out somewhere closer to the top. And I guess I'm making the point here that the Global Liquidity Index on its own as a Hopium metric will probably lead you astray, and it'll probably become not popular in the next couple of months anyway, when there's something else new that comes up. Maybe Michael Saylor posts about buying another $10 billion, $20 billion worth of Bitcoin. Maybe Trump makes another post. It's just about a popularity thing. So that's why I'm talking about it now, so that if it comes up again in the future, we can refer back to something like this and see whether it did work out. Maybe the correlation continues on. Okay, so that's around those peaks. The point I was making here is, when do you sell? Do you sell once the percentages come back? So let's have a look at some of the percentages here on the side. Here is the top at around 300, call it 360%. There's the low there at 345%. So that's about a 15%. Well, from 360 to 345, that's 15%, but obviously a smaller percentage overall. So do you wait again for a 15% drop to sell? Peaks at around 378, then it comes down by 15%, 363. If you were to sell there, well, you're somewhere around 9.5. So maybe you held it all the way to 20K, 19K. Now it's back down at 9.5. You get that signal to tell you that it's overbalancing in terms of the global liquidity. So there's more liquidity coming out of the markets. So on its own, you've got this downtrend continuing on. Now I wanted to discuss the leading or lagging indicator. I've heard a lot about how this can be the leading indicator for global liquidity coming back. But I'll use the 2022 low for BTC up until the current peak. Luckily, it's in 2025. That's January, but you've also got the December 2024 peak. So I'll just refer to it as either December or January, somewhere around that period, okay? So global liquidity, which anyone can see, has obviously been drying up this entire time. However, Bitcoin has been going up through this period. And within the cycle itself, so maybe this is the entire tightening cycle, well, you've missed out on roughly 600% low to high and any other number in between from that low to high. So maybe you got in after a key macro signal triggered to say, hey, I think it's time that you buy up BTC. We had a couple of those going off around 18K, a lot more going off around 20K. Then you had the typical double top breakout at 25K, and then a few more that came through at around 31, 32K as well. So there were lots of signs through here. But at that time, the market was very much of the view that this was going to come down. Over 90%. I remember the guys who were getting the analysis relatively okay here, even, it's believable what they're talking about now, they were very, very wrong at these lows. And at least my point of view, the way I like to trade is that I can be wrong up here, but because I've been able to identify some sort of low period, that leaves me a lot of buffer in the trade. So I could be buying up here. And this is just something that I'm sharing with you guys. Maybe you're able to call this yourself as well. If you can get in at a lower price, then it doesn't really matter whether you sell the peak at 108, 109K, or you sell at 90K, or you sell at 80K. You've got a lot of meat in the trade. Whereas for a lot of people back here, you got the global liquidity going down. You've got fear that there is going to be lower prices. You had the S&P 500 also coming down. You had everything plateauing at that point. But a lot of these indicators, the swing indicator, the overbalance in time and price, the diagonal downtrends, everything was breaking to the upside. Volume was coming back in as well. And so there were a lot of signs suggesting that this was more likely going to be a low than we were going to see much lower prices. So we're forming some sort of low here. So again, looking at this global liquidity index, it kept coming down through this entire period of the market going up. And there were some pretty good turnaround points here with the liquidity coming back into the game and then finding resistance, falling back again. So I'm just going to zoom out so we can get a metric here on the side looking at the percentages. So this peak here was about 340, just using this percentage at the moment. Because if I bring it back to just the global liquidity, you don't really get a good reading on that. It's pretty much just a still number there. So there's not really too much of a difference. Looking at 31 down to 29. So taking it back to the percentages, that's why I'm looking at these. Okay, so you got the low and then it rallied again. Should you be buying that? Should you be selling that? I think you can start to get the point that it's not really great on its own. And overall, in terms of a leading or a lagging, is this the low and then we rally up and it lags by 3 or 4 months? Does Bitcoin lead in this case, or does the Global Liquidity Index lead at this time? You got a low here in October on the liquidity index. You got a peak here in April. That's 6 months of movement up, and then it puts in a new lower low from that point. So if you've got questions or comments, maybe I've overlooked something here. I typically like to bring this back to something pretty self-explanatory and almost as basic as possible, just so that I can wrap my head around it. Maybe there is something more nuanced about it that you'd love to leave a comment about. Let me know in the comment section. But I think alone or basing any sort of hopium on this is really not a great way to go, because we've seen Bitcoin go up 600% from somewhere around the first significant low on the Global Liquidity Index. Here is that low after the market came down, a bounce, down, bounce, down, bounce, down, 600% up. And right now, the Global Liquidity Index has still not put in a higher high. It keeps putting in lower lows. Eventually, I think the belief here is that we're going to see a turnaround on the Global Liquidity Index. But would you be waiting for that turnaround, or are you just trying to buy up on each of these dips? I guess on the one hand, buying up on the dips now hasn't been a bad option at all. You've got $20,000 around this low. You've got $26,000, $27,000 around this low. But again, how do you know that that was low and it wasn't the low back here or back here or here, right? So that's an interesting part to, obviously play out in your own plans. But taking it at face value, just looking at the exact low, I guess, if you were able to pick the exact low of the Global Liquidity Index, well then, you're buying up somewhere around 60K again, and then the final low here around $90,000, $93,000. So I think the timing aspect of the Global Liquidity Index is a bit of a misnomer. You can see these tops in the market back in 2013, $1,100 for Bitcoin, $1,200. The Global Liquidity Index basically didn't top for another 28 weeks, so 6 months. Then you got to see the thing roll over, and then you look for a signal at that point. So I'm not quite sure where some of these calls for 12 weeks or 14-week leading indicator come from, or maybe it's a 4 to 5 month. It's not that clear overall. And even as the liquidity was increasing through the 2020 to 2021 cycle, we really did see a lot of the energy die out around January. That's where a lot of the volume basically stopped. And then the final peak that came in April before the all-time high in November. So basically through this first quarter of 2021, the global liquidity was still rising, but of course that was starting to slow down. So you then have to look at some relative strength of the global liquidity to the price of BTC. As I said, this is just my opinion from my analysis. It's pretty straightforward and clear to me that it's not the greatest avenue to be weighing that Hopium on. I've said that many times before, but I'd be happy to hear from you guys in the comment section. There's always something that we can learn from each other as well. If you want to share something down there, let me know. I'll be posting about this on X as well. So if you want to continue the discussion on X, please do so. So now what else can we do? Well, one is the overbalance in time and price. You heard me talk about that yesterday, the day before. So I'm not going to go into greater detail on that here. That is a very, very powerful tool. Go and check out those videos. I'll leave a link to them at the end of this video. But if you want to bring that into your own trading and investing, then I strongly suggest learning it from start to finish and how to use them properly by checking out TIA Premium. Obviously, I said their sale on today. But let's take a step further. We've got the overbalance in time and price. That helped us out through this low, this low here, and the signal came up here in September. Now, the next piece of the puzzle, I think, that I like, are these diagonal downtrends. Once we get some of these signals that say, look, the trend is changing, even though we do get pullbacks, the breakout with volume is another addition to that trading plan that can help you get a much more accurate reading of a change in trend, and that you're going to see a takeoff pretty soon. You've got the takeoff here. We had another couple of signals through late 2023, and then we had a nice takeoff from 30-ish up to 40, 45, 50, and then the final one into 74. We did it again at the lows there. So on the logarithmic, you can see the breakout from these two highs happened in January. Then we had the February top. March came back, tested it through the banking crisis. We did have an overbalance in time and price through this period that overbalanced anything here. And then as the market kept running up, the time from the low to the high kept exceeding all of the prior moves in the bear market, which helped us identify, well, seems like the buyers are definitely going to stick around no matter how dire things get. The fear and greed took its time here. We dropped back into fear multiple times, but the buyers continued to hang around, even in the face of all of the negative bearish sentiment that happened through the second half of 2023. At that time, it was pretty well agreed by 80 to 90% of people that we're going to go into a recession. Now, I've got a couple of tweets that I put out at the time. This one here goes back to December 2022. You can see the date here. You can even find it online if you want. And through those lows, we'll seeing these things happen in real time. It looked like the S&P was bottoming. Therefore, I expected that Bitcoin was also bottoming. Not trying to catch the exact low, but just look at where the major trends are going, because they're the trends that I prefer to follow rather than day to day. I'm a bit more of a longer term investor or position trader overall. Real estate, I didn't think it was going to crash in 2023, and from that point, we've only seen prices go higher. And again, in 2024, we saw them go higher. And the European freeze, which was a big thing at the time, didn't happen. We saw commodity prices come back a little bit, and right now we're starting to see them move to the upside again, like copper, like gold, which is also leading to this final peak that I think we're going through. So hopefully that has been somewhat helpful when it comes to the Global Liquidity Index. So I trust that's been somewhat of a help, especially if you made it this far in the video. Let me know, hit the like button, subscribe to the channel if you haven't already. Check out the sale that we have coming up on TIA Premium. We've talked about that at length. And some of the signals, indicators, the swing chart, the 50% level, the 3-bar rule, the overbalance in time and price. A lot of these things are relatively simple to understand. It's a matter of implementing them into your plans, finding out which ones are working on which markets. In the case of what we're looking at here is BTC, and then being able to action those in a mechanical method. So even going against what the majority of people are saying and feeling at the time. I'll leave it there, guys. Anything else I missed out, let me know in the comment section. I'll do another video on that coming up. Until the next one, take care and peace out.